evening, friends. Welcome to today's webinar. So today's webinar we have kept on factor investing. So if I give a brief about factor, so what is actually factor investing? So it's basically an investment approach where it involves where a fund manager basically approaches the specific drivers of return across asset allocation. So basically, there are two types of factors. One is at a macroeconomic, and one is style-based thing. So in macroeconomics, the factors like economic growth, what is the rate is going on, inflation, credit cycle, markets, liquidity, everything. And about style, if I speak about style, so it includes value, momentum, quality, size, and everything. So today we have Mr. Mahavir Kaswa. He's Senior Vice President and Research Head for Passive Funds at Motilal Oswal. So he is carrying a very rich experience of more than 15 years in the capital markets. So he is with currently in Motilal Oswal Asset Management Company. So let's learn today like what is actually factor investing and how important it is for investment purpose and how it can help us to create wealth. So over to you, Mahavir.
Sure. Thank you so much, Dhiren, for the kind introduction. So what I'm going to do is now I'll step back before actually we start talking about factors, and I'll first approach to the investment styles. So if we see, there are two styles of investing. One is active, where fund manager actually decides where and which stocks to buy and which stock to sell. And second style is passive investing, basically where fund manager actually aim to replicate a benchmark, and the benchmark can be Nifty 50 or Nifty 500. The idea here is to earn the return that are equivalent to the benchmark return. So these are two styles of investing. Within that passive itself, there are two types of funds: index funds and ETF. Globally, these funds has taken a lot of attention by the investors, and we can see the similar trends in India. Now coming to the India, I think not just passive fund. Within passive fund, actually there is another branch called factor investing, which typically offer passive funds. And as Dhiren beautifully explained, what the factors are. Essentially, as he rightly said, that factor basically aims to identify different performance drivers of a portfolio or a stock, and aims to generate returns out of that. So whatever portfolio that you hold in the factor investing is basically one attribute of a particular return generation, and you invest into that. What I'll do is now I'll just quickly share my screen, and I'm going to introduce the factors here, and then my colleague Tushit would be online in a few minutes with us. I think he's already online, in fact.
Yes.
So he will also explain you in more detail the couple of factors that we have, which are very popular in India, and not just India but globally as well. I hope you can see my presentation, right?
Yes, yes.
So as we're talking about the factors, globally there are a number of factors that are available. But if we see, there are a few factors which are very prominent and very easily available for the investment purpose. And those includes momentum, low vol, quality, and value. I'm going to first quickly give you a bit of a broader introduction in terms of what the factors are essentially. And then I'll let Tushit take over to talk about low vol and momentum in more detail. So if we see the investment style of any fund manager, so factor is not like a scientific, very like a rocket science sort of thing, honestly. Like I want to first remove that fear, the thought process from the investors, where a lot of investors feel factor is something really very black box sort of thing, which I strongly believe it's not at all. In fact, if we see the lot of investment gurus that are in the market, like for example, the way he identifies stocks is basically he looks for a stock that are undervalued, which are high in quality, or sometimes he also look for a stock that are less volatile or more stable in price movement, and maybe a large cap as well. So there's a different styles where he identifies stocks that he want to invest into his portfolio. If we move forward, coming to India, Porinju, I'm sure most of us are also follow him. He also known as a small cap Kazar. So he has a certain different style of investing. In fact, quite a bit of relatively opposite to Mr. Warren Buffett. What he does, he actually looks for stocks that are smaller in size, that are undervalued, and maybe low in quality. So it's another way of identifying the stocks. But what is interesting here is that attributes that he identifies to select the stocks is interesting. And the next one is Mr. Ramdev Agarwal, who is also who is also founder of Motilal Oswal Group. He has his own QGLP methodology. I'm sure you must have heard about that as well, which includes high quality stocks, low longevity, and growth and value are the few basic elements that he looked to create his portfolio. In a nutshell, basically, as I was trying to say, explain that factor investing is basically identifying the different drivers of a performance of a portfolio or a stock, and you base up and those drivers have been used as a building block for your portfolio construction. I already explained that there are four prominent factors in the market: momentum, quality, value, and low vol. I'm going to skip this slide and come to here. So if we go back to the history, initially when we used to look at the portfolio performance, we never had even benchmark also, like long back in 1960s. Water return that was given by the stock market used to be a return for us. But then when we had started comparing with benchmark, we realized that there is one concept called market return, which is a benchmark, which is Nifty 500, Nifty 50. And then anything excess to that is an alpha that you generate. But coming in a recent period, if we now break it into further, so we have one concept called market return, we have factor return, and there is a bit of a smaller portion now available, if it is available, that is called alpha. So this is how now returns of a portfolio can be attributed. And today, I think Tushit would like to focus upon the low vol and momentum factors. Um, so one important aspect in the factor investing is defining the factors. Now, basically what it basically means is like, let me take an example of momentum in this case. When we talk about momentum, we look for a price trend. Basically, moment is nothing but looking at the trend of trending stocks which are moving upward or downward essentially. In this specific case for momentum, we look for 6 month and 12-month price momentum stocks that are upward trending for the last 6 months and 12 months. And these stocks have been including a portfolio, like you select certain number of stocks in a portfolio and you rebalance them on a periodic basis. So that's how you probably kind of create a portfolio for a momentum. And so it's for other factors also. There are different descriptors for each factor, which has been used to create a particular portfolio factor. Yeah, and I think I'm just going to stop over here and I'm going to hand over my session to Tushit here. But what we have seen globally is factor investing, particularly not just for passive one, but overall broadly, has grown tremendously from less than $2 trillion in 2017 to an estimated number of 3.4 trillion by the end of this year, which is 2022. Tushit, you want to take over from here?
Yes, I hope I'm audible.
Yeah, you're audible. Dhiren, you're there?
Yes.
Yeah, so please, if you would like to share introduction of Tushit, so that would be great, and the topic of today. Yeah, sure.
So we have another speaker from Motilal Oswal AMC. He is Mr. Tushit Thakkar. He's a Quant Fund Manager for PMS and AIF schemes at Motilal Oswal. So he's primarily responsible for research and construction of strategies on factors and cons at the company. So he's having around 4 years of experience in capital markets, and he holds at master's degree in economics and bachelor degrees in electronics and instrumentation. So over to you, Tushit.
Yeah, thank you. Thank you so much, Dhiren, for that introduction. And thank you, Mahavir, for taking the initial part of the presentation. I'm sorry, actually, just like every cliched issue, I think I was stuck in a Bombay traffic and took some time to get here. So Mahavir has already talked about factors, correct? Or given a brief introduction के factors क्या होता है, किस तरीके से होते हैं, and these can be applied everywhere, correct? So what is the basic idea of factor? When I say, okay, what are the factors that contributed to a success of a movie? What are the factors that contributed to the success of a cricketer? Yeah, cricket team. Similarly, I will ask, what are the factors that contributed to the success or a failure of a particular portfolio? And when I try to answer that, the the variables that I get as basically factors. Correct. So ये explain करते हैं कि risk और return कहाँ से बन के आता है. So this is all covered. But Mahavir talked specifically about this slide. Correct. So let us, if we try to analyze this, कि चलो एक time पे let us take an example and we say that Warren Buffett, for example, in this case, correct? And why do I take Warren Buffett? Because he is the best track record in the world, correct? So if over a period of 50 to 60 years, Warren Buffett has gotten a total return of 19%, that is called the portfolio return. But when I try to decompose, and yeah, already these studies are out there in the market. So when I try to decompose this 19%, I get to know that 7% is because getting exposure to the market. Correct. So if you would have exposure to the market, you would have gotten 7% to 8% returns. On top of that, the additional 11% you are making, correct, is because of alpha. So 1960s it was got what people used to assume, 8%, 7 to 8% is what the market made. Anything above that was what alpha, correct? So Warren Buffett made 11% alpha, but today we know that out of that 11%, 7% is because of factors like value, quality, low volatility, correct? So in fact, if you look at the overall returns of Mr. Warren Buffett, correct, what you find is out of the 19%, correct, जिसमें से 11% is total alpha, only 4% is actually pure alpha. Correct? The rest 15% is a return that was made because of market and factors that were there. And what we are trying to give you a solution today is that nothing but the combination of market return and factor return by investing in these type of products. Correct? That's the overall idea. So if you look at the risk and return of these particular factors, correct, and you can pick any factor out here, you'll see that the returns are marginally to quite significantly better than the broader benchmark. Some are taking extra risk, some are taking relatively lower risk. Correct? So you get an overall point-to-point picture, but doesn't tell you a lot about these factors in itself. Correct? When I see them year over year, an interesting picture comes out. Correct? We ये देखते हैं हम asset allocation quilt की तरह. This is nothing but a factor allocation quilt. So 2007 से 2021 तक देखिए, and you will find that each and every factor at some point in time is the best performing factor, and then over a period of time you will see that it has also become one of the worst performing factors. So the idea is that winners keep changing. There is no single factor that has outperformed the benchmark on a consistent basis. But this again, this entire idea and picture table, it is too much of data. So when I try to understand this on a more granular scale, correct, what I try to get is different type of factors behave very differently in different markets. Correct? And this becomes very intuitive. To look at any bear market, when markets are correcting, during those periods of time, factors that give you stability. Now, stability can be defined in terms of fundamental data. Okay, they have less debt, their ROEs are return on equity or return on asset numbers are good, and they have good cash flow numbers. These are all fundamental attributes of stability. Or you can look at price stability. Correct? Stocks that don't move a lot are relatively more stable. They don't have high standard deviation or less risky. Both of these factors, be it quality or low volatility. Quality is nothing but stability of fundamentals. Low volatility is stability of price. Correct? So no matter which particular factor you have within the quality lower space, you are given that downside protection during a bear market phase. But when markets start recovering from that particular area, you'll see that during the recovery market, value as a factor typically does well. The reason is again very intuitive. The stocks, these are the stocks which have fallen the most during a bear market. Correct? So these are the sector or segment of the stocks जो economically leveraged होते हैं. ठीक है? तो जब economy अच्छा करती है, they do very well. When economy goes down, they don't do so well. And finally, when markets mature into a bull phase, ऐसा time पे momentum as a factor relatively starts doing quite well. Right? So this is the idea. Now this is for someone who wants to time the market. Right? So if you are someone who believes that I can time markets very well, I think we are in a bull market phase very well, go ahead and take some exposure in momentum. Right? If you think it's a bear market that we are seeing, but you want to be invested in equities because on the flip side, it could just so happen that markets recover quite quickly and you won't be able to allocate, then very good, you can allocate in something like quality or low volatility. Correct? So you have these exposures at all points in time. Correct? And you can time them basis what your intuition is. But then for the majority of people, in fact, people like me who can't believe they can time the markets and believe that time in the markets is more important. Correct? For those particular people, we can see that as you increase your rolling period or your investment period or horizon, you see that your odds of outperformance increases, especially for factors like quality, low vol, and momentum. Right? So you look at 5-year data, 7-year data, 10-year data, you'll see that you have almost 95 to 100% probability of outperforming the broader benchmark. That means when you're looking from a long-term perspective, these type of factors make sense in having a core position in your overall portfolio. Value is a total separate beast in itself. Correct? Uske upar baat we'll do at a later stage. Correct? Why value is important and what significance it holds. It's completely different. Correct. So that's the overall brief introduction about factors. Factors kya hota hai? Correct. Mahavir explained that quite beautifully. And then what are the basic ideas of factors and how they have performed on a historical basis. So with that background in setup, correct? कि factors क्या है, factor investing क्या है और ये factors होते हैं. We'll get into what is momentum. Correct. And momentum is something जो आपने शायद तक सुना होगा, नहीं सुना होगा. But the idea of momentum came from Mr. Newton. So what Newton said was, it's the first law of motion. Anything that is stationary will stay stationary for a period of time until you apply some force. And on the other hand, something that is moving, correct, will keep on moving until there is a negative force that is applied. But similarly, there's this concept in investing. You look at one stock, a stock that is not performing well for some time doesn't perform for a period of 2 years, 3 years, 5 years, 10 years. They have long gestation periods and suddenly it starts performing. And when it starts performing, it keeps on performing for a period of 2 years, 3 years or so, and handsomely compensates for that overall period as well. Correct? And this we have seen. If I can take examples, look at the performance of Reliance. 10 years, there was no performance, almost flat. And then suddenly in a period of 2 years to 2.5 years, it gave all its outperformance. You look at something like ITC, correct? It has always been that cyclical. Over a period of 5 to 6 years, it doesn't perform. Then it gives 1.5 year type of outperformance. Again, then it doesn't perform and this cycle keeps on happening. Correct? So this is nothing but momentum that is there in the markets. What this strategy tries to do is capture that particular momentum in a more systematic way. The idea is systematic. Correct? So there is these rules that we define. There is no bias or emotional or cognitive type of biases that are there at our end, which basically helps us get this exposure to these particular factors in a more systematic way. Correct? That's the idea. So that is nothing but momentum. Correct? It's a tendency that jo stocks acha kar rahe, that will keep on doing well over the near term, and stocks that are done quite poorly will keep on doing poorly over the near term. Correct? This is, and the momentum is there in each and every segment. Correct? So I said factors can be applied everywhere. So momentum can be applied everywhere. Correct? So you look at momentum, you say that, say for example, a particular cricketer is in momentum, or you say a particular cricketer is not in momentum. Correct? You look at the movie business, correct, and you'll find that a particular actor, say for example, just in case, maybe Ranveer Singh is giving hits after hits. So your expectation aapka aisa banta hai ki the next movie that comes is going to be a hit. And similarly, on the other hand, if you look at it, someone like Shah Rukh Khan, correct, who has not been given hits, all of the movies that he is coming up with have been flops. So there's this expectation that is automatically set in our minds, correct, ki jo agli picture aayegi wo bhi shayad tak nahi chalega. So that is nothing but the momentum factor. Correct? So what is the basis of momentum? The idea is very simple. It's a principle, correct? Bhav Bhagwan che. Correct? So price defines everything. Price will define which stock will get into the portfolio. Price will also define which stocks will get out of the portfolio. The idea here is not to buy low and sell high, correct? Because no one knows where the low is going to be. The idea is buy high, sell high. Correct? So buy when the market trends upwards. Correct? That point, buy the overall market, let the trend solidify, and start selling when the market starts trending downwards. Okay? That's the overall idea behind momentum. Now, why does this work? उसके पीछे कोई लॉजिकल इंट्यूशन नहीं है. करेक्ट? आप किसी को भी पूछो कि यार pick a security or pick stocks that have done well for the past 6 or 12 months and they should do well in the near future. Is there any logical explanation for that? The answer is no. Correct? There is only a behavioral and psychological explanation to this particular factor. Correct? So when you look at it, stock, there is this bias called status quo bias. Correct? जो जैसा चल रहा है वैसा चलते रहता है. So what happens is that when there is suddenly a catalyst that is there in the market, we normally tend to underreact to that. Correct? And then slowly and steadily, there is a start of the trend, there is an underreaction, but the market moves. And some people who are early to the game capture that particular trend, and the momentum factor picks it on. Then slowly and steadily the trend keeps on continuing until then when the trend there's herding, there's overreaction, you see your friends investing in the same set, you see a lot of investors making that, you see a lot of articles being written on money control, lots of people talking it on the financial news sites and everywhere, correct? And then there's this herding behavior, people overreact, and then there is this overreaction to that particular trend, after which trend starts reversing, and just as the trend starts reversing, the momentum as a strategy sells that particular stock. Right? This is the simple idea behind what we are trying to do. A momentum index fund or a momentum type of passive strategy will try to select stocks during this phase, if you can see my mouse pointer, and will try to sell during these particular type of phase, capturing this entire rally. That's the simple idea. And that is why if you see these type of strategy or this particular type of strategy is very good for people who want to actively participate in the market and churn their portfolios. There are a lot of people who come and ask today कि कौन सा सेक्टर है जो आपको लग रहा है नेक्स्ट 6 महीने अच्छा रहेगा. Problem is that I can give you a call कि कौन सा सेक्टर है जो अच्छा है, but then next 6 months I'll not come and tell you that this is a good time to exit that sector and this is a good time to enter the another sector. So let momentum take care of this automatically. Correct. You don't have to do anything particularly. Momentum as a strategy will pick the sectors that are relatively doing well and keep on rotating or churning them. Correct. So for people who are actively seeking risk or actively seeking these type of strategies, makes a lot of sense. Correct. And momentum is especially tricky, especially interesting because it works everywhere. Correct. It works across different markets, be it US, India, Europe. Correct. Emerging markets, works across different asset classes from equities, bonds to commodities, and also works across different time periods. Right? So you can capture momentum using a 6-month or 12-month indicator. You can in fact capture momentum using a 1-month, 2-month indicator as well. So momentum har jagah chalta hai. Now how we are typically capturing momentum? The idea is very simple. We take the constituents of the Nifty 200 index. Okay? So top 200 universe lete hain. We check whether these stocks have a minimum 1-year history or not, or whether they are in FNO. The idea is very simple because we want to calculate the momentum scores. We want to see if liquidity is there or not. And then we select the top 30 companies basis momentum score. This score कैसे calculate होता है? You take nothing but a 6-month and 12-month price return, correct, and adjust them for volatility and average them. You get a momentum score. So you select top 30 companies basis this score, and you ensure that there is some capping that is done to have some risk management perspective. And you apply these rules every June, every December, twice in a year, semi-annually basis, and you get the momentum portfolio. Correct? So what I've done here is that I have taken a factor momentum and I have applied it in such a way कि आज ये rules अगर मैं आपको दे दूं, correct? So doesn't matter if Dhiren runs it or Rohit runs it or I run it. Every one of us will come up with the same set of portfolio. That is nothing but capturing factor. So if you look at this strategy, a very simple strategy that I told you, to pick the 200 universe, select top 30 stocks, basis momentum, और उसको थोड़ा weighting cap कर लो ताकि आप risk अपने तरफ पे minimize कर सको. So what would have the strategy done over the past 1 year, 3 year, 5 year, 10 year time frame, and the results are quite remarkable. This simple strategy has actually delivered quite significant amount of outperformance over the broader benchmark. So you look at 1 year, 3 year, 5 year, any particular time frame. The idea here is ये return maximize करने का try करता है, but also takes an additional amount of risk. Correct? So you look at the risk numbers, volatility, आपका risk बढ़ जाता है, but आपका return भी बढ़ता है. Correct? But the returns that are there are more than compensated by the risk that you are taking will get more than compensated by the returns you make. Correct? You look at the risk adjusted returns, nothing but your return divided by risk numbers, and you will find that in all of the cases, in any particular time period, momentum is doing better than the broader benchmark. That's the simple idea. And you can look at calendar year returns as well. यहाँ पे again मुझे ये नहीं बताना है कि देखो 15 में से 12 साल they have outperformed. The idea is when they have outperformed and when they haven't. So you look at periods like 2008, 2009 when markets were quite volatile. ऐसे time पे these strategies don't do well. But then suddenly when markets start trending, this is the particular area where during a bull market phase when momentum as a strategy will do relatively quite well. Look at 2021. Momentum has done superb, phenomenal, correct? 54% type of CAGR returns. The 54% type of absolute returns when the market is 28-29% return. Okay? So this is the overall idea. Okay? During a bull market type of phase or when markets are doing great or trending, momentum as a strategy will relatively do quite well and will give you that results. Okay? Again, you can look at the rolling returns. मेरे को यहाँ पे again quantum से ज़्यादा important है consistency. Correct? You look at 3-year, 5-year type of rolling frame. Correct? You look at it, more than 76%, 75% of the times you're getting double-digit returns. In fact, close to 40% in 3-year cases, or almost close to 50% of the times you're getting returns greater than 20%. Correct? So that's the overall idea. What I'm trying to show you by this particular graph is that when you're coming into these strategies, come from a 3-year to 5-year point of view. Right? Don't come कि यार 6 महीने मेरे को लग रहा है तेजी है तो let us pick momentum and then switch to some other strategies. This is market timing. It typically doesn't work. Correct? Then you can blend momentum into your portfolio as well. So for people who think yeah, momentum क्या risky strategy है, just we did this exercise. Okay? Considering you have a Nifty 500 type of allocation, just by adding 15% to 30% allocation of momentum into your portfolio, your risk doesn't increase by such a big amount. Correct? So look at this particular case where you had 15% exposure to momentum. The volatility numbers are almost similar. In some cases 21.4%. So instead of 1 year, look at 3-year, 5-year long-term time frame. Look at it. आपका volatility या तो same का same है या तो 10-20 basis points से बढ़ता है. But look at the returns. उसके सामने आपको अच्छा compensation मिलता है. Almost to the tune of 1% or more than that. So you are not taking additional risk. You are generating more returns. That's the overall idea behind blending momentum. Correct? Why should you invest? The idea is very simple. Correct? कि आज अपना portfolio खोल के देखो. Right? And when you try to analyze your portfolio, you will find that you'll have an active fund which is giving you a quality exposure. काफी सारी MCs जो quality देती है. You have an active fund which will give you some value exposure, but there is no momentum into your portfolio. There is no these type of strategy into your portfolio. Correct? So our portfolios are not so diversified at the end of the day, and then you will find that during a bull market type of phase, आपका portfolio जो है वो उतना अच्छा return नहीं बना के दे रहा है. The idea is that you are not diversified enough. You don't have the momentum factor into your portfolio. So it's a very unique proposition, something that is not easily available in the market, and no active type of fund manager can actually give you that exposure. The second is that जैसे मैंने बताया, correct, investor का behavior होता है momentum. Correct? There is this under trending or under reaction, and then there is an overreaction and overconfidence to the trend. So behaviorally, this becomes a very interesting strategy because it gives you that, captures that essence of behavior and gives you return from that perspective. The interesting thing is यहाँ पे you don't need to time कौन से market cap segment में घूमना है, कहाँ कौन से sector में invest करना है, कौन से time period से invest करना है. If you're coming with a more than 3-year type of time frame, you don't have to actively take call which sector to get in, which sector to get out, and what should be my exposures be. And that is why it makes it very nimble and agile. Nimble and agile meaning कि बहुत ही ज़्यादा तेज product जो कहते हैं ना, very fast moving product. For people who are actively seeking some type of returns or alpha generation, this becomes a very interesting type of strategy. Okay? So this is one segment of the market. जहाँ पे हम momentum की बात की करें, which is trying to maximize the return quotient of your overall portfolio. There is another strategy which is trying on the other end of the segment or other segment of the market, which is trying to reduce maximum हो सके उतना reduce the risk that is there in your overall portfolio. Correct? From the sense of volatility. So what is low volatility? The idea is very simple. Correct? आज अगर आपको, say for example, यहाँ से आपको घूमने के लिए you have to go from here to Goa, correct? And there are 2 roads. एक रास्ता है जो काफी सीधा साधा है, थोड़ा लंबा सा है. दूसरा है जो शॉर्टकट है बट माउंटेन्स के थ्रू जाता है. Correct? At the end of the day, you may think, okay, there is this shortcut. Let me take the shortcut. I'll enjoy more. It will be more of twists and turns, ups and downs, and I'll reach Goa. Correct? But then what you're doing is that you're forgetting that your आपका main goal क्या है? It is to reach your destination. Correct? So during these time frames, the idea is very simple. During if you select the first road, correct, which is less risky, correct, the benefits are first, it is less risky. There is less wear and tear of your overall car. Correct, आपका accident होने के chances कम है. And you save up on your fuel as well. Correct. On average, we see that roads which go a lot up and down and twist and turns normally also consume a lot of fuel. So from all of these perspectives, you look at the second road, correct, which is more stable. सीधा road है, आपको गोवा पहुंचा देता है, थोड़ा सा लंबा है. But here the journey is very peaceful. Correct. It's more straight in line. आपको ज़्यादा tension नहीं है. सीधा रास्ता जाता है, आपका fuel relatively बचता है. There is no risk of accidents. So similarly, we are finding these type of strategies within the equity segment as well. What is a very safe way of getting an equity exposure? Right? This is the type of question, or this is the type of exposure that typically low vol as a strategy captures. Correct? But then you may ask me कि ये तो intuition के against है ना, मतलब हमें ऐसा बोलते हैं कि अगर आपको return ज़्यादा बनाना है तो risk ज़्यादा लेना चाहिए. Correct? But that is not true. What research has found is that over history, stocks which are relatively less volatile in nature, they have outperformed the broader markets in the long term. And this is because they are more defensive in nature. So these stocks जो होते हैं ना, ये गिरते कम है और recovery भी कम करते हैं, but पूरी cycle के अंदर they do better than the market. Correct? And I give you that example. To show that as an example, मेरे पास यहाँ पे 3 स्टॉक है. स्टॉक A, स्टॉक B, स्टॉक C. करेक्ट, दोनों स्टॉक का एवरेज रिटर्न 25% है. तो हर साल ऑन एवरेज स्टॉक के 25% रिटर्न दे सकता है, और स्टॉक तीनों स्टॉक 25% रिटर्न दे सकता है. पर स्टॉक ये जो है वो गिरता ज्यादा है, चढ़ता ज्यादा है. स्टॉक बी ऑन द अदर हैंड फॉल्स लेस, recovers even less. Stock C falls even less or falls the least and recovers the least. Correct? But in all of these 3 cases, my CAGR is different. In the stock A scenario, the stock which goes down 50% and recovers 100% is basically a 0% CAGR. But stock C is 20% CAGR. Average return in all of these 3 cases is 25%, correct? Minus 50 plus 100 by 2, minus 30 plus 80 by 2. So on average, and over a long term time frame भी हम कहते हैं कि on average अगर हम बोलते हैं कि निफ्टी 13% रिटर्न बना के देता है on average, correct? But ये 13% एक्सट्रीमली वोलेटाइल बना के देता है या वेरी लो वोलेटाइल फॉर्म में देता है, आपके कैगर नंबर्स काफी डिफरेंट हो सकते हैं. करेक्ट? दैट इज द बेसिक आइडिया इन इंट्यूशन. द ओनली रीजन why these 3 stocks have the same average return but a different CAGR is because the volatility of these portfolios or these stocks is relatively different. And I can continue this exercise for all the possible combinations that are out there. And what I see is कि आपकी volatility जैसे बढ़ती है मार्केट के अंदर, आपका कैगर धीरे-धीरे कम होता है. Correct? That is why हम always नहीं बोलते कि SIP is a very good way to invest. The reason or intuition behind that हम क्यों बोलते हैं इसकी आप SIP करने से आपकी volatility कम कर दें. Correct? So that is why it gives you a greater benefit over a long. So for people who say ना कि I am a very long term investor, मेरे को volatility या risk का फर्क नहीं पड़ता, the answer is wrong. Volatility या risk से सबको फर्क पड़ता है. That's the overall idea. And this is where low volatility as an index or as a factor targets. Correct? यहाँ पे भी similar. We are taking the large and mid cap segment of the market. We select top 30 companies basis the volatility score. Correct? Weigh them according to this volatility and cap them at 5%. Correct? And this entire strategy is rebalanced twice again every year. एक बार मार्च में, एक बार सितंबर में, and you get the result. That's the simple idea, and you get a low volatility type of index. Now you can ask me, how has this strategy performed over the history? Correct. More important point is how has this particular strategy performed during periods of extreme volatility? And you look at global financial crisis to taper tantrum to yuan devaluation to COVID-19 pandemic. सारे इन periods के अंदर there is this performance that is there. Correct. But if you look at the past 1 year return, आप आके बोलोगे कि सर आप ये कौन सी strategy लेके आए हो? Why is it giving so poor returns? Correct. Look at the 3 year, 5 year, 10 year, 15 year type of period. Slowly and steadily you see कि हाँ performance थोड़ा better हो रहा है over a long term time frame. That is exactly what I told you in the beginning, correct? कि these type of strategies will fall less, may recover less. Bull markets में इतना अच्छा perform नहीं करे, but पूरे cycle के अंदर these will become or emerge as champions. Correct? That is why if you look at the volatility, the important thing to look at is कि हर period के अंदर risk है relatively less than the broader market. And on a risk adjusted basis, look from 3-year, 5-year, 10-year, 15-year time frame, or it is always better than the broader market. That's the idea. Again, you can look at the calendar year returns as well. The idea again is not to show you कि 15 में से 9 साल has outperformed. The idea is to show you when it has outperformed. 2008 में ये कम गिरा है. 2009 में it has done better. Again a volatile period. 2010 Euro crisis. Okay, 2011 it has again done well. Right? Then look at periods like 2014, 2015 it has again done well. Right? Look at 2018 when your small and mid caps corrected quite a lot. It has done well. But look at 2020 COVID वाले time frame में जब volatility ज़्यादा थी market में, again it has done well. But in 2021 it has underperformed. Simple सा idea है. So this is exactly what we are talking. These type of strategies will do well when there is protection of volatility in the market and आपको protection की जरूरत है. On the other hand, there is momentum strategy which I talked earlier, which is give you that return maximization type of potential. So bull market जैसे phase में ज़्यादा अच्छा काम करेगा. And again, you can blend low vol into your overall portfolio, and you will find that your risk in the market is, reduces quite significantly. And your risk-adjusted returns increase. Now, this particular type of strategy is actually perfect for people who just are starting with their equity type of investment and starting out and looking for something which is relatively safe and secure. Right? Or for those people, ऐसे type के लोग जो BAF type की category को ज़्यादा analyze करते हैं. And you can see here, over the last 15 years, equity has given you 12% type of returns. Debt ने आपको 8% return जितना दिया है. The equity plus debt 50-50 combination would have given you close to 11.8 to 12% returns. But उसी portfolio में अगर मैं equity की जगह low volatility type के stocks लेता, तो my performance is now 13.3%, doing better than the equity market. So over a long-term time frame, your combination of low volatility stocks plus debt, which is conservative in nature, gives you, in fact, better returns than any other asset class that is out there, but at a significantly lower risk. अगर आप चार्ट देख सकते हो, तो look at the comparison. Equity is a 21.7% type of volatility. Debt obviously सबसे कम volatile होगा, but look at the volatility of low vol plus debt portion. It is close to 8%. In fact, even lower than 50-50 equity debt. So that is the beauty of the overall product. Gives you long-term returns like equity, better than equity, with the stability of debt. Right? That's the beauty of these type of product. Why should someone invest in low volatility? The idea is very simple. Again, आपको एक unique exposure मिलता है. Correct? There is no active fund that is out there which is giving you a low volatility exposure. Correct? It's a more unique type of approach, something that may be missing in your overall portfolio. It's very good starting point for someone who is worried about the market volatility. Correct? अगर आपको डर लग रहा है कि market में volatility बढ़ने वाली है, आप equity में invested फिर भी रहना चाहते हो, then low vol makes more sense as an allocation point of view. If you want a product which has relatively low volatility than the broader benchmark, you can invest here. And these type of products are more effective during a market crash. Correct? The idea is very simple. वो psychologically play करता है. When the market goes down 38% and your portfolio goes down only 30% or 28% or so, you get this comfort. Correct? You have fallen less than the market and you can stay invested from a long term. That's the overall idea. Correct? The final piece of the puzzle is, मैंने अभी बताया, momentum is a risk maximization, return maximization type of strategy. Works very good in bull markets. Low vol is a risk minimization type of strategy. Works very well in bear markets. What if I combine both? Correct? एक जगह पे मैं protection seek कर रहा हूँ, दूसरी जगह पे I'm trying to maximize my alpha. What I find is over 1 year, 3 year, 5 year, 10 year, 15 year period, this combination does better than the market. Any time frame you pick. Right? And it does that with almost the same volatility or less volatility than the market. Right? And that is why if you look at the risk-adjusted scores, doesn't matter which particular time frame you are looking at, it is always better than the broader benchmark. Correct? And from a rolling return perspective, अगर आप देखते हो 3 year 5 year type of time frame, अगर आप 50-50 allocation 5 साल के लिए invested रहते हो, 95% of the times you're getting more than double-digit returns. There are zero observations where you got a negative result. Okay. This is the stability that you can get by adding these type of factors to your overall portfolio. And that's the overall simple plain idea that we are trying to aim at. So I think that's basically it. Gives you a very simple crux and idea about what we are trying to do here at the our end. If you have any queries, the questions are always welcome to answer. I'll be happy to answer those questions. And अगर आपको ऐसा लगता है कि there's something that you want to understand again, something that you missed out, I'll be happy to cover that as well. Also, Rohit, if I missed something, do let me know.
I just request all the participants, do you have any query related to factor investing, you can just post in the Q&A box or chat box.
Even if it's something जो आपको चाहिए कि मैं वापस cover करूं, see these are very important things. Factor, मतलब we all know about one factor, correct? Size. हम बोलते हैं small cap, mid cap, large cap, हम समझते हैं वो क्या space है. हम ये भी समझते हैं कि underlying risk क्या है, return potential क्या है. What we think or we feel is that over the next 5 to 10 years, we will be talking about all of these factors like this. Correct? So very important कि start getting to know them, understand, start tracking them, and if you want, start adding some little bit of exposure, 5%, 10% exposure to your overall portfolio, and just look at the beauty of how it performs during the time frame. That's the overall idea.
So, Tushit, Dhiren, yeah?
Yeah, hi there.
Yeah. So, like, suppose, like, currently, like, as you are like more focusing on momentum and combining, as you said, low vol and momentum strategy. So, like, what do you feel like till like for coming future? So, like, till what is the cycle phase basically for
Okay.
this strategies? So,
Correct. So as I said, I
so
think
like
personally,
what tenure, what?
correct.
Yeah.
As I said, correct. Look at from a 3-year type of time frame, and if possible more than that, but at least look at from a 3-year time frame. Especially because although the current time may be volatile, correct, a lot of industry experts and everyone keeps on saying that we are at a very good position from an equity, from a market standpoint of view. Right? India is at a good place. The next 3 years, 5 years could be a bull market. So from that perspective, yes, you can add momentum to your overall portfolio. Why I say add both combination of low vol and momentum is because, as I said, it's like timing. Correct? You don't know what is going to happen tomorrow.
Right.
Even I don't know what is going to happen tomorrow. So why don't have both the exposures? Like safety protocol bhi rakh do. So correct. It's like wearing seat belts so that I can try do some overspeeding at my end. Correct. मेरे गाड़ी के अंदर मेरे को पता है enough risk measures है, enough safety features है that I know that how much I can speed, how much I cannot. The low vol plus momentum is exactly perfectly that combination, correct, which gives you that that ability of doing giving that protection during a bear market and doing good in a bull market type of phase. But look at from a 3-year perspective. Cycle, कोई भी cycle को 3 साल देना, मतलब it's important to give that particular cycle 3 years. Especially considering we are in a volatile time frame as well.
So you mean to say like the combination of these two, like it helps to stay for a longer period comparatively by
definitely
combining both the strategies.
Exactly. Well, see, for me also it is good.
Yeah.
Anyway, it's a passive product, correct? तो आप आके मेरे को नहीं पूछने वाले कि अंडर परफॉर्मेंस क्यों आ रहा है, क्यों नहीं आ रहा है.
Right.
But from your perspective, it will become very good. आपको भी शांति है. Or this combination will typically give you that protection going down. It will typically deliver that alpha going up. So आपकी भी queries आपके end पे कम आती है. You are also diversifying the client's portfolio by adding these type of securities along with the active funds that you would already be suggesting. Correct? Gives a separate flavor. Correct?
Right.
And from that perspective, yes, this combination will do better from a behavioral perspective. आपको it will make the investor stay invested for a long period of time. That's the idea.
So, like, what do you think? Like, what percentage of our like we can advise our clients to invest in these type of strategies? like maximum, people are more interested in active side of thing, as this is a
Correct.
passive side. So people don't understand well, and if I compare, because always we try to show them returns like, okay, these are the funds and which are we are beating the benchmark.
Correct.
Yeah. So like, what should be the share or of the portfolio we can allocate to this side,
See,
so that it will help our, so we, because in our
definitely.
partner list we have
Definitely.
our business partners
So,
as well, and plus our sales team as well, so that we can understand.
correct. See, how much should you add now depends largely on the client. But what I would recommend is, okay, let us take an example of a client which is more aggressive in nature, always looking for active schemes, churning the portfolio. Tell them at 10%, 15% type of flavor of momentum, it will give you that good exposure for an aggressive investor. There are certain investors who are always on the risky side. कि मेरे को रिस्क कम चाहिए, मेरे को डर लग रहा है मार्केट में ये हो जाएगा, बट इन्वेस्ट नहीं करते, हमेशा डरे हुए होते हैं, अरे यार अभी मार्केट फटेगा, अभी मार्केट में ये होगा, बट इन्वेस्ट कभी नहीं करते, and they always give up on that upside. For those people, tell them lower. बोलो कि even if the market corrects, your portfolio will correct less and you will get that protection. Correct? For people who are looking at their core basket equity more balanced, for them add 10% of or start with 5%, slowly increase it to 10% of your overall fund from a diversification point of view, and look at the beauty of the overall performance. Okay? I believe that over the some time frame, people will start looking at these type of portfolios, and that is where your alpha will come in. Correct? By giving your clients and your investors suggestion to these type of strategies which are out there in the market. तो आपको वो एक सेट ऑफ सेटिस्फेक्शन मिलेगा. You can keep this allocation fix as a core portion. ये 10% मैंने डाल दिया है momentum low wall में, they will give me that protection, and the rest I can invest it in, say for example the Nifty 500 index fund as well, or say for example some other active funds that are out there in the market, depending on what you are comfortable with. But that is how I would look at it.
Great. So thank you, Tushit. So
Yeah.
it was a great session, and I think I'll just request our all our sales team and our business partners who are there on call. So we should also using this type of strategies, and we should start advising our clients as well, to give at least start with of a small exposure, so that once they are they have a taste or flavor of this, so we can increase accordingly. So it will, as Tushit rightly said, that it will help or give the cushion to our portfolio. So
Exactly.
we should look at this type of funds and strategies. And as we see, in developed markets, already passive funds they are already an upper edge. So in India, still we are at not at that stage, but yes, we are growing good on that passive side. So each and every AMC, particularly, they're focusing more on the passive fund strategy. So I think it was a great session. Thank you, Tushit, and thank you, Rohit, for arranging and this session. And definitely, we will promote this strategy at our end, and we'll try to focus on the particular fund. Thank you.
Sure.
Thank you, Dhiren, and
Thank you,
Nirmal team to join us and to give us the opportunity to present the presentation. Thank you, Tushit. A great presentation.
Thank you, everyone. Have a good day.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.